I suppose, the question I've been getting from a lot of people is whether SYD will actually follow suit. And I suppose my view, particularly after speaking to the CFO yesterday, is it's probably a better than even money chance that they actually won't. My logic here is first up, SYD's got plenty of liquidity and it's actually got relatively less refinancing obligations and capex obligations than Auckland does over the next year to two. So Sydney's got about $2 billion of liquidity versus its cash and its undrawn debt facilities. It's got only $770 million due at the end of this year, and there's another $720 million due next year. So that's imminently coverable through that liquidity. Its capex program, look, I think we're going to see that really get scaled back. So, they had guided for 350 to 450 mil of capex this year. It wouldn't surprise me if it comes in more closer to sort of 200 mil per year over the next couple of years. And, let's not forget, this was a business that was running on ridiculously high EBITDA margins. So, it's been running at about 81% EBITDA margin. So there's a lot of fat to give up there before it really hits the crunch in terms of being able to cover off on its OPEX. Let's not forget that it does have lease income coming in from its property leases, from its retail leases, albeit that will be subject to negotiation. And there will be a dribble of aero revenue coming in, yes, over the next 6 months that should actually improve, you'd think, as we come out of come through the recovery. So, look, I've got an ad rating on Sydney. Closed yesterday, $5.19. I've got a target of $7.82. I really think this one will bounce strongly into the recovery. I was lucky enough to listen in on a Melbourne Airport investor briefing to USPP note holders. I'd just like you to sort of walk you through that. It might help you sort of frame your thinking in terms of how at least one major airport's their central planning scenario is. So, what they're saying is that they're expecting nil to limited passengers to come through their airport until September 20. At the moment, they're not at zero passengers, but it's really tailing off. So the international passengers are around about 7% of the normal. So it's really just Australians returning home there. Domestic is running at around about 5% of the normal level at the moment. It's really only essential travel. Now, they're a June financial year end. They're expecting not to get back to the FY19 level of passengers until FY23. By mid next year, they're sort of thinking they'd be about 20% of the FY19 level. So just for your reference, my base case is for Sydney Airport not to get back to its calendar year 19 level until calendar year 22. So a little earlier than what Melbourne's factoring in, but, not a great deal of difference there. Now, Melbourne, they're expecting a steady pace of recovery to come through, and they're thinking, firstly, it'll come through domestic. So domestic will start moving again. There'll be a push from government to start travelling, to get tourism going, etc. And then international will start to kick up. They're thinking international, though, will be more challenging. It needs countries to be confident in each other's borders in their containment of the virus. They think that China will open up first with them, and then Northeast Asia, and that's good for airports and it's good for the economy because those are countries that are big spenders. The rest of the world, they think, will be more problematic in terms of opening up and connecting with Sydney and Australia, and it could very well be subject to a vaccine being developed. So, look, Melbourne's doing all the things that SYD has said it's going to do. It's pulling way back on its capex. It's watching its liquidity. It's liaising with its rating agencies. Considering relief packages for its important partners. Another interesting comment also it said was it's expecting airline consolidation and airport consolidation to come out of this period. So just thought I'd feed that interesting commentary out of that unlisted briefing into you guys. But certainly very confident that Sydney will bounce back, and in terms of share price, bounce back very strongly once we come through into the recovery period.